why mortgage companies or financing companies took place at first. Let's talk about this. It's to stay away from regulation. Banks are heavily regulated. So they create a mortgage company or go in partnership with a mortgage company just to avoid the regulation. So by default, mortgage companies take more risk. In Saudi Arabia, unfortunately, banks doesn't take risk. They only have your salary, then they do whatever they want. It's not a risk they're taking. That's why they don't understand the transaction. Give me your salary, I'll give you a million riyal, buy a home for 20 years. I have your salary as long as you work. So that's not a risk taking. Banks went aggressively in the last 3 years. They provide mortgage for anyone can have their salary in that bank. Default rate increased in the mortgage industry and mainly driven by banks. There is something we're trying to adopt, we're trying to encourage the whole industry, and it's an international trend, responsible lending. You know, it's not what banks does right now in Saudi Arabia. They only check your willingness to repay, which is you use the credit bureau, credit report to review your credit behavior. Then you have your salary with the bank, you can get a mortgage. And they extend your purchasing power by deducting more from your salary. In some cases, we have seen 2/3 of your salary goes to the bank in buying a house. Buying a house, a new house, there is a lot of expense comes with that. You're responsible about the maintenance, electricity, larger house, water, and right now everything is more expensive. And cost of fund also increased. So imagine I start with you 2 years ago, I take 2/3 of your salary, then on a variable product, which means your interest is going to be reviewed every 2 years. Then if cost of funding goes up, which is the case right now, your deduction goes up. Some banks are deducting 80% right now, 85% of someone's salary. So they're putting you in a place where you have to choose between feeding your kids or paying the bank. And actually, you don't have a choice. The bank take their money first. So that is a very dangerous. I think right now things are changing. We're trying to call for responsible lending. It's not enough to check a willingness to repay by reviewing the credit, etc. You have to make sure of consumer ability to repay, which is you need to use other tools. You need to check what is his disposable income, how much left, how many kids in his family, how many people he support. We know. Consumer doesn't know. As long as you provide them with credit, they think they can take it. We are the one who knows. We should study any consumer ability to repay and make sure that he can pay in the future and not causing consumer harm or put them in a very bad choices. I'll give you an example. In Dar Al Tamleek, we have this belief since we started. And we don't have this salary assignment, as I told you. All of our consumers have the choice to pay or not. But our default rate is 15% of the industry default rate. It's much less. We have a much higher quality of assets because we study very well the ability to repay. And it's by default. Banks doesn't need to. Well, why should? Since they have your salary and they can take it before you can reach it, they can deduct from it. Why should they? That's why a responsible lending concept might help us to understand the market better.